I think that my thesis was that once we got done with the deal on China, we would quickly move on to Germany, Japan, and the other sources of our trade deficit. So the fact that this has been pushed back till November means that we do have an opportunity for a decent window where business confidence can improve and capital spending can continue its boom in software and services and the like. So I think you have to view that as pretty favorable news. But I doubt very much.
Even with the rhetoric still being elevated towards China?
The fact that we're not going to go directly at Germany is good news. And inevitably, we will end up going after Germany as well. They're running a 7% current account surplus, which is as big as China's was at peak, 6-7 years ago. So Germany a year ago was talking about cutting their VAT tax, cutting their income taxes, starting to stimulate domestic demand and working through all the imbalances that existed in Europe. They didn't do it for political reasons, and so Germany is likely to become, the subject of this ongoing trade war over time. But as I said, the fact that it's moved back to November does give us an opportunity to get a deal done with China and then move on. We do think ultimately there'll be a deal done with China.
Rick, we saw the impact that all these trade headlines are having even in the bond market today. I mean, when you saw the stock market turn around, you saw those yields come off the low, especially the 2-year. What do you think the bond market is pricing at this point? Is it slower growth because of these new tariffs?
Well, there's so many channels, I think it's impossible to decide which one's the most important. On the channel of the relative value trade, you have Bund yields briefly trading minus 12 basis points, which is like 7 basis points away from their July 2016 all-time lows, which, by the way, our 10-year at that time was at 135. Now, if we look at the other issue, and that, of course, is generic global growth, it is definitely playing into the buying. I was actually quite disappointed in treasuries because normally they're very responsive to the buoyant effect of an equities, especially a reversal day like we've had today. And yes, they didn't go through, but especially the long end could not get off its established 2019 closing yields, 237 for 10s, 281 for 30s. And yes, we came off several basis points on the short end, and I think that made sense. One other issue I think is huge, and Barry hit on it, but there's been a lot of deterioration in the German economy. As a matter of fact, a lot of their, they have a huge social net program in Germany, and there's been talk they may have to start looking at various issues as their economy continues to slow. This is huge with regard to cars. And remember, the trading foe of our trading foes is our friend. Everybody wants to paint this picture. We should be more in tune with our allies over how we proceed with China. Believe me, it's like the New England Patriots. Whoever is number one, everybody is their foe to some extent. And I do think that we've gone awfully fast from we think a deal's going to happen in spirit to we don't think one's going to happen for a long time. Markets very little gray. I think the issue is much more gray than the markets are concentrating on right now.